anytime you come on the show, I cherish these conversations, Dean, because you have such a great perspective on the industry. You drove, you've been on all sides, and you are one of the individuals that I have followed the most when it comes down to your takes on the market and what's going on out there. And we obviously DAT is the official data partner of the Freight Coach podcast now, and we do a freight market analysis 3 times a week. So we choose, and it's all viewer submitted lanes, because I always want people involved in it. Like, what are they seeing from their desks? How can I help them assess the lanes that they're moving to kind of get ahead of some of these seasonal spikes that are out there? So if you're open to this, Dean, the viewer submitted, it's Miami, Florida to Charlotte, North Carolina, and it's a reefer. And this kind of is going to go into our conversation today. So I'm laying up here, and I wanted to talk about kind of what we're seeing out here in the market as a whole right now. And so for those individuals, Dean, who are unfamiliar with your guys' platform, what goes into like the 7-day and the 15-day data points here?
From a subscription level, are you sort of asking, where does the data come from?
Yeah.
I mean, we have a bunch of subscribers that send in the data every night. We've got brokers, carriers, and shippers. The overwhelming volume of data comes in from our brokers. It's probably a 70, 20, 10 split between brokers, carriers and shippers. Overwhelmingly, weighted towards dry van, because that's the majority of freight in the market. So I think the important data point, though, is that the majority of the loads are in the majority of rates are in before the loads are delivered. I think it's something like 75% of the loads are into our platform before the loads are delivered. So they're coming in from the TMS systems every night. Then they're averages, right? So we do a lot of cleaning of the data. We take out the highs and the lows so that we end up with an average, so that you scrub out some of those round trip rates, or those, really high rates, really low rates, and you come up with an average rate for a lane. And then you have a minimum number of subscribers on a lane. So you end up with what's the best average that you can sort of describe as a starting point for your negotiations. Now, I think it's fair to say that when you look at a rate on a lane, that's not what someone's precisely carrying a load for on that lane. But for those in the space, it's a starting point. I think that's how I've used the rate. So it's, DAT's been at this for 47 years. It's we've got a fairly deep bench when it comes to data. And I think if you follow Ken Adamo, he had a great post this morning about Ratecast's accuracy. The depth of this data, as I've been here just over 5 years, and I've been constantly amazed at how accurate Ratecast has been based on the data and the depth of this data that comes in every night. Ratecast is running somewhere in that 90 to 95% accuracy, but it's been really accurate in predicting this current cycle.
Yeah.
And his LinkedIn post this morning was very accurate in terms of how accurate Ratecast was predicting this current cycle we're in now. And he's got an interesting forecast out to 2027 right now. So encourage everybody to have a look at that if you're interested in where we think spot rates are going.
No, I saw Ken's post this morning, and I agree with everything that he's saying. And, because it's like, I look at this right now, Dean, like even at this data set alone, I pay attention to all of these markers that kind of come across here. And, again, some people see a $500 variance, right, between today and the 1 year mark. And, for me, it's like, I look at this trend line here, most importantly, and it's like, all right, how can we I always go to the highest numbers, right? And for me, it's like, all right, May 2025, there was a spike in prices. What was that? All right, there's a holiday that comes along in that time. So that drives a lot of it. And then that's also kind of, you can almost see the produce off here, right?
Yeah, Well, Chris, you're talking outbound Miami, right? So outbound Miami, you get a lot of capacity tightness because Lakeland produce season really comes online just north of Miami. So that sucks a lot of reefer capacity out of the market into that central Florida region. So Miami competes with that, but it's also Mother's Day. So Mother's Day is your peak floral shipment season. It dwarfs this week in terms of Valentine's Day. And I think that's an important point, because what you're talking about here is seasonality. And this chart is one of the really interesting charts, because you can see on the far left there, February, that little blip. And so it's a blip, but it's seasonally, it happens every year. But look at Mother's Day blip. So outbound Miami's not a big produce market, but those two blips are your floral peaks. And I think it's important because this week's a really good example. 90% of our Valentine's Day flowers come from South America, from Ecuador and Colombia. And I'll have a post out in the morning on social media where I've looked at the last week's air freighters, and I've got a fast forward video of the last week's air freighters running back and forward. And it's a fascinating look at how all of these planes have dropped something like 52,000 tons of floral arrangements into the market. And of course, they're all running out of Miami on teams and a bunch of solo reefer trucks. But it's such a concentrated market. And the funnel shape of Florida is a really interesting market because there's only one way out.
Yeah.
And because the US imports the vast majority of its flowers, unlike Europe, where they grow the majority of their flowers, we import the majority. About 90% of our flowers for Valentine's Day come into Miami, 10% into Los Angeles. So you see this heavy concentration of floral arrangements into Miami. And then, of course, it really hits in this 2-week period leading up to tomorrow. So we see this concentration of volume and then rates. And they really peak. They started peaking on Monday, and they've kind of been elevated all week to the point where rates have been it's somewhere in that 25 to 30% higher than where they were a year ago, which, Chris, I think that's a really interesting data point in and of itself because rates have been up out of Florida. I did a post on it yesterday or the day before when I was sitting at the airport watching these planes come in and out. And because I'm a real data nerd and a bit of a transport geek, and I just love watching the old 747s that have been converted into cargo freighters. And I'm watching them thinking, heck, like on the other side of this are all the trucks on the other side of the dock there. And I could see all the trailers loading. And I thought, this is kind of fascinating because the volume surge is translating into this sort of rate surge that's paying carriers to Philly, Boston, Atlanta, Baltimore, even Dallas, somewhere in the order of $1,200 to $1,500 more per load than a year ago. So now we're ordering more flowers. Well, we're not. No, when I say that, we're spending more on flowers. That doesn't mean we're buying more flowers in terms of tons. There could be an inflationary effect there. So why are rates up? So why is that chart going up like that? And I think part of it is there's less trucks available. There's less capacity available this year. And I think a lot of it's got to do with the fact that we've just got less capacity in the market. And I think it's really hit the reefer capacity more so than ever. And I think a lot of it's got to do with the fact that every scale house in Florida was turned into an immigration enforcement center last September. And I know anecdotally, a lot of carriers are reluctant to go deep into Florida because it's such a hard area to get in and out of. You've only got a number of roads you can go into because it is a deep backhaul market, right? Once you go south. But if you think about every scale house has got ICE or DHS people sitting there, unless you're 100% squeaky clean, it's not a place that a lot of people wanted to go to. And I think that, and look, this is not news to people. If you've been listening to me on my IQ show, I've been saying this for 3 months, right? Yeah. And of course, here we are. I've been saying there's 4 things to watch for. Avocados and limes ahead of Super Bowl. Well, that came through. Berries out of Lakeland. Well, the cold weather has delayed that. Those volumes are down this week. Valentine's Day was the other one. And of course, when we see the transition of lettuce from Yuma back to Salinas, that'll be the real crunch as to how much capacity has left the market. But I think the reefer market and produce season is going to be really interesting this year. But the fact that this week we're already seeing produce volumes paying carriers $1,200 to $1,500 more per load, I think that's a really interesting data point.
And we're going to end the land analysis at this from here because I'm of that mindset, Dean, with you, where it's like, and I've said this a lot. You brought up with the immigration checkpoints and everything, and I'm to the point where and I said this on the show yesterday. I'm like, there is a potential golden age of freight that is coming to the 100% legitimate carriers that are out there, especially in some of these markets where it's like there will be able to charge an absolute premium to go and take these loads now, because it's like, hey, listen, we are XYZ company. Here's all our paperwork. They're going to be able to get more money. I think that this is what this is inevitably driving out of there. I mean, I just saw something on social media 2 days ago where a driver was in Florida, and he had showed there was like 15 trailers left at the scale house at one scale he went through, because there was all of those drivers who failed a variety. You know, you can't prove what they got suspended for, but like the trucks were gone, the trucks were towed. There was 15 trailers at that one scale house alone. So I think I would say that the outbound Florida market could potentially drive some, I don't want to say historically highest rates ever, but this is going to drive in one of those potential markets here coming up where those carriers that are dialed in, this is their time to take advantage of that.
Well, those rates there on that Charlotte lane, right, are 46% higher year over year. There's something to this.
Yes.
And I think what's important is we haven't even got into peak produce season in Florida, because it doesn't hit till May. Now, this cold snap has delayed the maturity of the strawberries up in Lakeland. So we're off to a bit of a late start. So there will be a hit on volumes. But we will see produce season. It gets to that hot part of May, and then you'll see that produce season fall off. But I think, Chris, the interesting trend that I'm watching is, that as we move north through the latitudes and temperatures warm, we get into the southeast, and produce season really hits the starting line. You get to Vidalia onion pack date in April, and then we're really into that peak produce season in the southeast. If you're already seeing a capacity attrition in the broader market and reefer market in particular, because you and I, most people know that produce is a real spot market play because of its time-sensitive regional nature. I think personally, talking to a lot of drivers and just the way that market shakes out, I think that the enforcement actions on a lot of our drivers in the last 6 to 9 months has disproportionately impacted the refrigerated sector, particularly California carriers, California minority carriers. And you've only got to do some internet searches, and you'll see lots of stories on YouTube and different news outlets about California capacity that's been reluctant to leave their state. So that sort of sets up a really interesting produce season, and of course, if that impacts reefer rates, well, that drags up dry van rates, and it kind of sets up an interesting scenario for the rest of the year.
And for me, you guys, the outbound Florida market, specifically into produce, is the epitome of stability, in the sense of you want to read a market for the long term, because Florida, for the entirety of my career, has performed in the exact same manner. So from my perspective, you're probably going to see some pretty decent spikes here coming up this produce season out of Florida in particular. And I think this is one of those to watch, where you're going to be in a very good position if you are truck in hand spot market. But if you bid RFP freight out of there and you already have locked in rates for 2026, and you did not consider anything that's happening right now, I would pay attention to the tender rejections, specifically in the Southeast. And then from a sales perspective, that is a market I would want to hammer, because what Dean brought up there about like reefer, the Florida market with produce and reefer doesn't just affect reefer. It inevitably drives up the dry van rates as well. So this could be a target rich environment from a sales perspective if you are out there trying to develop business.